This is James Hirecheck with today's Autochartist stock index to watch for Tuesday, September 11th, 2012. Following last week's strong rally, U.S. stock indices took a breather on Monday ahead of this week's important Federal Reserve meeting. Since it is possible that the news may already be priced into the market, the indices are starting to show signs of a top. This makes the E-mini S&P 500 futures contract the stock index to watch today. Autochartist technical analysis has determined that the E-mini S&P futures contract has formed an emerging rising wedge chart pattern on the 1440-minute chart. Further technical analysis has determined that the overall quality of this chart pattern is rated an average 5 bars. The initial trend, which measures the strength of the trend prior to the pattern's formation, is rated an above average 6 bars. The initial trend is down, as is the projected break, making the trend change a continuation. The 4-bar uniformity rating suggests a below average number of equidistant tops and bottoms. You can see that there aren't any clearly defined tops and bottoms or equidistant tops and bottoms in this chart pattern. So we have a low rating. The 6-bar clarity rating indicates that the number of price spikes and price gaps is slightly below average. These tend to skew the chart pattern. The study of technical analysis of chart patterns has defined the rising wedge chart pattern as a trending pattern. You can see that the market has trended inside of this rising wedge. It is actually a combination of the channel up chart pattern and the non-trending triangle. Usually, an emerging chart pattern is attractive to swing traders who wish to sell resistance and buy support and do so until the market breaks out. But because of the gradual narrowing of the support and resistance lines, this chart pattern suggests a possible breakout developing to the downside. The recent range of 1394.50 to 1438.75 indicates a short-term support could form at 1416.50 to 1411.50. However, a breakthrough 1405 could trigger an acceleration to the downside. So right now we have an emerging pattern. The market spiked up last week, but then has traded sideways for a couple of days here. Now we're given indications that this market could pull back. The main trend is still up and would have to cross down here around 1394.50 to turn the trend down. But the first sign of weakness will be a failure to hold this retracement zone at 1416.50 to 1411.50. The second sign would be a breakthrough support. This has been the Autochartist stock index to watch for Tuesday, September 11th, 2012.